Hey everyone, curious about what really drives a business's profits and where it all goes? We've decoded the balance sheet. Now, let's dive into the dynamic world of the profit and loss account, where the real financial story unfolds. Before we begin, don't forget to like and subscribe. It really helps us reach more finance enthusiasts like you. Understanding the P&L isn't just for accountants, it's for anyone who wants to make informed decisions. This video will empower you to analyze a company's financial health and performance. You'll learn to identify growth, efficiency, and potential red flags. Think of the balance sheet as a single photo. The P&L account, however, is a captivating movie. It tracks a company's financial performance over a specific period, usually a quarter or a year. This movie reveals how much a company earned, how much it spent, and ultimately how much profit it generated. At its heart, the P&L is elegantly simple: revenue, expenses, profit. This fundamental equation drives every business. But to truly understand a company, we must explore the details behind these numbers. Revenue is the total money a company earns from its core operations, like selling products or services. It's often called the top line because it's the first figure on the P&L. Growing revenue is a key indicator of a thriving business. Beyond core sales, companies can also have other income. This includes earnings from non-operating activities, such as interest on investments or rental income. It's important to distinguish this from core business revenue. Understanding expenses reveals a company's operational efficiency. Key expense categories include cost of goods sold, COGS, direct costs tied to producing goods or services. This includes raw materials and manufacturing labor, employee costs, salaries, wages, and benefits. For service-based companies, this is often their largest expense. Depreciation and amortization. These are non-cash expenses reflecting the gradual loss of value of assets over time. Depreciation applies to physical assets, while amortization applies to intangible assets like patents. Other operating expenses. This broad category covers everything from rent and utilities to marketing and administrative costs. These are essential for day-to-day operations. Interest expense, the cost of borrowing money. High interest expenses can signal significant debt. Tax expense, the mandatory portion of profit paid to the government. This directly impacts the final profit available to shareholders. The P&L statement guides us through various profit levels, each offering unique insights. Gross profit, revenue minus COGS. This shows profitability before considering overheads. EBITDA, earnings before interest, tax, depreciation, and amortization. A crucial metric for operational efficiency, stripping out non-cash and financing costs. It helps compare companies across industries. EBIT, earnings before interest and tax. EBITDA, minus depreciation and amortization. This reflects operating profit after all operational expenses. PBT, profit before tax. EBIT minus interest expense. This shows profit before the government takes its share. PAT, profit after tax. PBT minus tax expense. This is the bottom line, the ultimate profit belonging to shareholders. EPS, earnings per share, is calculated as net profit divided by the number of outstanding shares. It tells you how much profit each share of the company earned. A consistently growing EPS is a strong signal of a healthy, profitable business and is vital for investor analysis. By analyzing the P&L, you can ask critical questions. Is revenue growing sustainably? Are expenses under control? Is the company generating healthy profits for its shareholders? This knowledge empowers you to truly understand a business. Mastering the P&L account is a superpower for any aspiring investor or business enthusiast. It reveals the true financial narrative of a company. Now that you understand profit, join us in the next video as we explore the cash flow statement, where we'll discover why profit doesn't always mean cash. Hit like if this explanation clarified the P&L for you, and subscribe for more essential financial insights. See you there.